Good morning, everybody. Good morning, everybody. We're echoing. Why are we echoing? There we go. All right. Accidentally messed up the stream this morning. Had to fix that. Should be good though. So kind of tough. We already hit our objective. I was hoping that we would leave these highs for 10 o'clock and then we could target them using 10 o'clock news. We've actually hit that heading into high impact news. However, notice that the first presented is perfectly aligned with that high. So to be honest, like if we didn't have news, I would already be trying to long that. Since this low cleared this short-term low, we revert back above, we get back above the buy side. To me, that's pretty valid here already. Let's go to a higher time frame, right? If we want to target yesterday's high, or even fill in this 15-minute fair value gap fully. So two objectives for the time being. It's 15, and then we'll go Thursday's high, last Thursday. Okay. So yeah, we'll see how we react here. We barely cleared these lows, so maybe we can come back down. But I'm seeing this how we've cleared short-term lows. We've come up and cleared the highs. So for the time being, we're just gonna have to wait for news. Our game plan would be, let's see, we open at 9:30 here. We have a short-term low, opening range gap midpoint. So at 9:30, we've moved only up. So actually, I would see if we can't try to maybe revisit this low here. Short-term low just above the opening gap's midpoint, which tends to be traded to quite often in the mornings. Right, as ICT says, 70% likelihood we want to tap that midpoint. So that's kind of what actually my objective will be. As we said, we have news at 10, so we won't do anything until then. Simply just following price for the time being. Already kind of disrespected this first presented twice. So we create it bearish, we get above it, bullish, and then we fall back below it. So for the time being, not really respecting that. We're not surprised, however. Probably just wait until news. I do want to see if we can use that as resistance. So I'm going to watch the low of it. See if we want to start respecting it, moving lower at all. Or if we're just going to keep kind of going up and down through it, heading into 10 o'clock. Macro sense, still bullish, right? So in the long-term sense, as we've been talking about, no need to try to call the top. We're still looking for this high up here. Matter of fact, we've closed above the 4-hour from yesterday, so that becomes an inversion. That's what we're using as support. So yeah, I still favor higher prices. Just want to see if we can't get a retracement first, maybe, and then we'll look to long. Because if we're trying to long from up here after prices already ran, just a little bit less likely, lower probability. Ideally for me, I'd like to see 15-minute hold us, give us a short-term retracement to clear out sell side, returning into the opening range gap, and then get the run up to actually clear the highs again. So we hold the high of that first presented, close back below it again. We'll see if we want to respect it this time. So yeah, watch this. I'd like to actually hold that, as we said. I wouldn't mind keeping these highs in place. We have equal highs here. So if we can kind of stair step lower, keep these lower highs intact, respect the first presented as an inversion, or actually no, it is bearish. So just respect it as a reclaimed bearish fair value gap. Head lower. Maybe we don't clear the sell side, but at least try to retest maybe just the opening range gap at all. Best case scenario would be if we could actually clear that sell side though, and then get the reversal. That'd be clean. Because then in my mind, price will have done everything it needs to do as far as sell side delivery. Picking up that 15. Because there's also a 15 there too, so. I do like that, yeah. If we can get that run out, clear out a short-term low, we'll try to get long. For the time being, I'd like these shorts to hold. Not valid shorts for me, technically. Wouldn't be trying to enter on this just because we have news. But I do want to follow it, just so we can start getting in sync with order flow here. Oh. Okay, so right now accumulating positions at the high. See if we distribute lower. We said first presented bearish. It was a bearish for value gap. We'd want that to hold bearish. It's also the low of the 15-minute and the high of the first presented. It's probably the quarter level of that 15-minute as well. We took the anatomy of it, high to low. So pretty much, yeah, right on that level as well. Previous day high right here. That's what we were, so we run into previous day high, we consolidate, we give a deep retracement to clear out the sell side created in Asia and London, right? Creating that low of day. And then we get that retracement to clear highs now. So at this point, really buy side and sell side's been knocked out. Both areas of liquidity have been engaged with, which is why we're really waiting for 10 o'clock to see if we can't get us just some more price action, more confirmation in what price is wanting to do now. As we said, I wouldn't mind the retracement. If we were to blast through this 15-minute, however, I think at that point, we're gonna have to start reassessing and looking for higher prices without the opportunity of a retracement. Because now we've already spent a lot of time in here. That should be balanced if we're gonna start moving away from it pretty aggressively. 2 minutes, let's see what we get. Equal lows right here. NQ a little bit lower. Quick look at NQ, so a little deeper retracement sitting underneath its first presented as well. Buy side here, 15-minute. This is another 4 hour as well. So I have this up on the other chart. I'm gonna bring it up now just so we can see where we're at, but you can understand why we're kind of getting compressed here. On a 4 hour sense, this was our original one we're targeting, but we had two, right? And now we've traded up and through. So we closed above the lower one. We haven't closed above this. So I'm trying to see if this candlestick can do that actually. The 4 hour candlestick's about to close right now at 10 o'clock. So this should give us a pretty good indication. If we end up closing above this higher 4 hour, I do think that we're going to actually go bullish. So on the 1 minute sense, right, if we stay above the 4 hour here, that'll classify this as now an inversion, which I do like because we could use it as support to keep running higher. So news dropping here, 20 seconds. Let's see what we get. I'm just going to hide this for the time being. As you said, if we can come into the low of this, take this low, get back above, that'd be textbook. If not, we'll just have to reassess on the fly. Oh yeah, okay, perfect. So there's 10 o'clock, as we said. Let me get this low here. Nice. Could almost turtle soup that. Oh my, we should have bought right there. And we'd already be out. Thought about it. It's all right. We'll wait. Right, gotta wait for the closure. Could kind of be hesitating and then blast right through this, so don't want to be too antsy. 4 hour low as well, so I'm kind of watching to see if, as we said, if we respect the 4 hour fair value gap itself, that would have been clean. We run that low, 20 seconds. Let's see how we close. I do like that we held all these highs now, right? We created equal highs, higher or lower high, lower high, lower high. So we may actually just use the high of that and run. Watch this wick. I'm kind of watching midpoint. If we push through this wick, I think we might go bearish, but I'm watching the midpoint of that wick basically at this point to see what it's going to do from there. Four-hour consequent encroachment. So 4 hour consequent encroachment, opening range gap. We've hit midpoint perfectly. I do like that. So we should, if we leave a bearish fair value gap here, we can invert that. We should start running. Get above. Don't want to see midpoint here. And then we'd look to see if we can't clear highs potentially. So we might not even leave a fair value gap. Let's see if we leave a fair value gap right here. Ideally, we get above the 4 hour and then we just run. That's what we want to see, right? So now push up through the first presented here and just keep running. I like the opening range gap high potentially for entry. It's kind of a deep stop. We were going to use all that because it has the potential of coming through with that bearish. So I'd want to see us revert that. We're just going to watch and see, does this new week opening gap keep holding us? I like that for a potential entry point there, right? We should be able to respect this if we're going to hold bullish. Cleared the sell side as we wanted to see, holding the 4 hours still. Yeah, I don't mind trying that actually. I think we should hold this. NQ, let's see, deep retracement, let's see. Retracing into, okay, so first closure inside of it, that's fine. We actually close underneath the 4 hour consequent encroachment. So we'll see if that offers us like a short-term area of resistance. Still have yet to really break any premiums. So that's kind of what we're waiting to see. If we can maybe clear a low one more time, retrace, leave a discount or something, then we'll look to long. As far as in here, not really much to go off of, right? We just have to go off price levels. They're still choppy. Was there a large gap on NQ? Didn't even. Oh yeah, huge gap. Let's see, 5 minute wick. 15 minute, fully filled in that 15 minute like we said, so that's nice. So yeah, if we can get us some type of bullish, I still trust that. I want to see higher prices. Sloppy delivery for the time being, but right, I'm convinced we want to go long. So we stay on that idea. You said we are watching midpoint of the fair value or the wick. So I'm watching to see what the bodies are doing here. We did end up closing below. So closing below, we may want to venture into the low of it. Got to watch it now as an area of resistance. Right, is that going to hold price underneath? Or can we get back above it? At this point, since we have hit its midpoint, if we venture back above opening range gap, I think we'll try to use that to get long with whatever swing low got put in place here. Same idea if like we clear a low and revert. So still looking for longs, just waiting for the setup. Notice that on this run lower, right, there's no inefficiencies. So all of these candlesticks that are going lower are immediately rebalancing the previous candle. Which makes me think, yeah, if we can run out this low or give us a true tap, because right, this was like a perfect tap of that. Maybe it wants to venture a little bit lower into it and then reverse. So there's midpoint again, still waiting on a reaction. Let's see what this reaction is. Anticipating if we want bullishness, like let's say that we can leave a fair value gap aligned with this and then invert that. That's what we'd be using for entry. We do have some lows in here that price may want to venture into. 830 open potentially. Let's go to like a 5-minute. If we're going to seek and destroy, we do come for this low. I wanted this low to be protected so we can run for longs. If we end up closing below... I'd really have to see 830, honestly. Like, we'd have to close below the opening range gap for me to think these lows, because we can venture all the way back down and create another failure swing, kind of like here. So we do leave that fair value gap that we were talking about. So what I'd want to see is, can we leave any type of opening here and then invert that? And that is going to be our entry mechanism, right? It's the sell side as well. So yeah, that'll be all right. Let's try that. Like, especially if it got created like that, because right, the sell side is going to be consequent encroachment. So if this fair value gap stays exactly where it is here, almost anticipating it'll form before it does, and then we invert that, we're going to try to get long. If we just keep running lows, then for us, we just won't have an entry. As you said, we can go up and down, right? We have the ability, but it's just easier to kind of filter out one side of the market. And for us, price has just been moving higher, so we're trying to catch those nice longs. What does it mean when the candlesticks just keep rebalancing? So for us, right, that means that price, when it breaks lower, should not revisit these areas because there's going to be no inefficiencies. So that's why we see once we break through the low, price immediately runs into the low of their fair value gap itself, because we're already repricing and rebalancing all of the price in here as we're moving lower. So when we do break, there's no need to really, right, come back up here, which is why I'm also saying if we can invert this, that should be clear longs, because now we should run right through all this. But we're going to come for low a day again. So new low a day, that's fine. Still going to favor the longs. First presented did end up holding us nicely short. Right, so that was a good setup. Clearing the buy side, holding the short, running lower. Midnight level, 830 level. So key area here, we fall short of that. We should have just cleared that low. Jeez. Let's see, NQ's already cleared that low. So maybe SMT, let's see what we get here. This becomes sell side. NQ, as we said, quick look at NQ. NQ's cleared that sell side, this low. Notice how it's a wick though. So we do like to see that. So if we do actually revert from here, we may leave that low, which is just going to be kind of ugly, but let's see if we get a quick inversion. We might go short-term inversion right here. I like that play. If we're going to do an ends model potentially, got to wait for the closure. We do have this opposing fair value gap, which does cause me hesitation, but I like that. Up to first presented at least. If we invert the original one that we've been talking about, right, this, we end up leaving that exactly how we expected. So that is with the original liquidity. Look at that. Right, that's not random. That the original liquidity pool that we cleared with the 10 o'clock news and then clear with the fair value gap is the consequent encroachment. So we clear that, that's going to be our long using the original liquidity. Going to be a little bit bigger stop just because we do have this run, which is tough, but that's fine. Right? We don't need to have the best R to R, just need to make our money. Been a good week, so I'm fine giving it a little bit more risk, we'll say, or just wider stop. The risk is the same, it's just the stop loss is bigger. Okay, so I like this. Yeah, let's see what we do here, because if we're going to maintain bearishness, we should hold from here. As we said, we've already repriced. This is all balanced in here, really from this wick to here. All right, so if we're going to reject, we'll reject from here, we'll attack lows. But I do think if we can close above that, that should offer us a chance to get long. 5 minute. 5 minute opposing fair value gap though. So that'll be our one slight hesitation, but I want to see us get above the 4 hour, the 1 hour. I want us to basically get above all that. As we talk about in bullish environments, we want to see premiums give way. We close above, so I'm fine. We'll try that. What that would be midpoint, retracement into midpoint. Okay, let's clear all this up now. So fell short of the sell side. That could be an issue. Also, the 5 minute could be an issue here. So as we're saying, if we are offsides, obviously we're going to hold the 5 minute, break lower. What I would want to see is basically hesitation at the 5, like we're kind of creating now, retracement into our entry. And then I'd want us to actually blast through that 5 minute. So we've just got the entry retracement. Now let's see, if we fall right through this fair value gap, I'm already kind of right off put from this entry. In my mind, we should hold from this area and we should blast through this 5 minute. If we can't get above the 5 minute, as we say, that's just not a good sign for us. And I really want these equal highs up here. We'll partial out at first presented. Or actually, we have this little fair value gap. We'll partial out here. That'll give us 10 almost. Okay. So we're in. Now we wait. Five minute will close in 2 minutes. So we're going to get a good indication of kind of what the next move will be once that 5 minute closes. Hopefully, I'm hoping we can at least close near this 5 minute that's right here. If the 5 minute closes here in 2 minutes and we're underneath this original fair value gap, more than likely we get stopped. All right, let's go to a 5 minute just so you can see what we're talking about. So we have an opposing 5 minute here. I want to see this candlestick close inside of that 5 minute. I don't want to see it be a wick and rejection, especially because the 4 hour right here is aligned with that. So really, I want to see us get above the consequent encroachment. Like if the 5 minute closes underneath this 4 hour, that's what we're getting smushed at, right? We're really compressing here. So I want us to be able to get above these premiums and respect the discounts, not the other way around. Don't want us to get held at premiums and start falling through discounts. Let's move that 4 hour, keep the 5. We'll see. Like we said, price has been consolidating the past few weeks, so we're not surprised. We've adjusted our trading for that. What makes me bullish is just the long-term bullishness that we've been talking about, right? So the past few weeks, as far as the macro perspective, I've just been looking for higher prices, always. So like, let's go real quick here. So as we said, I want to see this high be targeted. So if that's the case, all of this in here, right, should reach for the high. So for us, as we said, we just wanted to see midpoint of the opening range gap and this low be cleared. We got a little bit deeper, hitting the actual low of the opening range, but we fall short of the low of day, while NQ runs its low day and holds that range. No candle bodies closing, SMT. We then actually hold midnight as well. Power of 3 still applying. We then revert above the exact fair value gap that we had predetermined beforehand. We're going to close one right there. That's 5 handles. We're going to close one more at previous day high. Beautiful. As we said, we want the 5 minute to close above. What time did this candlestick close? It's the 5 minute. That must be random. We have 1 minute until 10:16 closes, so I want this candlestick to remain above it. We should use this as support. We've left the opening range again. Stop loss can now, for me, really be moved. I don't want to have much risk in a choppy market. Since we've already closed 2, we can close another at first presented. As we said, previous day high may offer us resistance, which is why I'm trying to really cut risk and take partials. Oops. I do want to keep, I just want to hide the indicators. So I'm watching, I want this 5 minute, because the 5 minute candlestick has not closed yet. This one's closed, this one's just opened, 10:15. So a new 5 minute candlestick is opened, and I want to see that candlestick push through. As we said, small fair value gap here. We have 3 contracts left. If we give this fair value gap up right here, I think we may get stopped, or we may try to retest this one. At this point, we need to maintain bullishness, so we need to hold the most recently formed fair value gap here, especially because we create this wick. Right, we create the wick, we then trade lower, we accelerate and displace through the wick with the fair value gap, breaking a short-term high. I'd want that high to hold. If we invert this, that's just not clean. And as we said, we may hold off of previous day's high, come back down into this midpoint and stop us out, which if that's the case, that's fine, because we've already partialed out. So the stop loss will be break even. As long as the body can hold, we'll look okay, but we need to hold that area with the body. Okay, so I like that. So this would need to be my protected low. We visit this low, more than likely we come for stop. This low would need to hold. We would need to run a high. We're going to try to run one more contract off at this high right here, if we can get it. No, these are minis. I guess I could do this for you. Just people like that better for some reason. So as we said, this needs to be the protected low. We need to accelerate. If we can accelerate and clear this high, close above it, stop loss will go break even. Matter of fact, it'll probably go below this low, especially if we get a partial. So we should be able to partial out. Closure above the 5 minute is what we're looking for. We've traded into the 1 minute fair value gap. We've held it. Now I want to see a candle close back above the 5 minute. We have an opposing volume imbalance. I don't like that we're getting stuck there, because that could send us lower. So we need to first clear the volume imbalance, which would then clear the 5 minute. Should allow us to run. And then, as we said, first presented should be good, but if not, we'll have to adjust at that point. I like these highs, you know, right? These highs will be our objective. We need to get above that volume imbalance. Once we get above it, that'll be an area of support. So that's right, building in discounts. That's what I like to see. We need to get above the 5 minute. 5 minute, we've hit the high of it. Let's get above it. Let's run. Like mine. Thanks, man. Hey, love the stream. Appreciate it, fellas. I'm glad you guys are finding it helpful. Right? That's not what we want to see. That's not what we want to see. So to be honest, no, we've already partialed out. Can price come back down? It can. Okay, so the 5 minute has just closed and we've opened with a bullish volume imbalance. So what I'd want to see is actually, and that volume imbalance is the, okay. So this would need to stay open. If this bullish volume imbalance stays open, we're going to invert the bearish. The 5 minute will stay open. We should be able to run, especially if we get above the 5. Beautiful. So let's push through this high, push through this high. But we're going to try to partial because there's this fair value gap there. So that'll be a partial. Once we partial, we go break even. I don't like that either. So I do like, oh, so at the last second, look at that. We close that in. That's not good because we're holding the 5 and we're holding previous day's high. So we still have opening range gap that can support us. We may be spending, right, the next 4 minutes just chopping in here. But we need this 5 minute volume imbalance to remain open and we need to get above the 5 minute fair value gap that's right here. The 5 minute fair value gap is perfectly aligned with yesterday's high. This is a very key area. Notice the 2 equal lows here as well. Right, so it's equal lows, liquidity turned into resistance. It's yesterday's high. And now it's a 5 minute fair value gap high, which is why we're seeing price stalling here. The fact that we can close above it once was a good sign, but what do we often say? That very next candle negates this candle's actions, in my opinion. Because not only does it open with the bearish volume imbalance, but it closes back below previous day's high. So to us, right, that's not necessarily something that we'd want to see. We want back-to-back candles to confirm that. Ugly, yeah. So you know what? If we can tap this high one more time, I'm fine taking one more there. So just continuing to run down, as we said, that's already plenty. That'll give us 7.5. We're content with that. Especially because this volume imbalance here, we might get stuck. I don't like that we actually close back inside of our opening range. I want to see this next candle almost negate this candle and get back above it. If we stay below it and hold the 5 minutes consequent encroachment, that's just not a good sign. 2 minutes until the 5 minute closes. We've immediately rebalanced. Okay. So we may actually come back down on us here. We need this 5 minute low to hold pretty much is what I'm looking at now. 5 minute low of this fair value gap because it's also a 1 minute. Right, you'll notice that the 1 minute that was created is the consequent encroachment of the 5 minute. That needs to hold us. And when I see things that I do not like, we are quick to preserve equity. So we're gonna just try to take one here. Because I think this is going to hold us, especially if we close below this 5. Prop firms. Sorry, Abdul, didn't see your question. Primarily prop firms. I have a personal account that I use for options, not intraday trading. Cool. And like we said, if we accelerate through this high, I'm fine taking partials because we're securing profits. And then there's always going to be another opportunity to re-enter. So if we're still going to maintain bullishness and we run through these highs and stuff like that, we'll be able to find another entry, which that's fine. I don't like that we're holding inside of this opening range and holding below the 5 minutes. So that to me is not a good sign, which is why I want to get out at an area that will send price lower, in my opinion, if we're going to break lower. Oh yeah, there's nothing wrong with prop firms, honestly. I think prop firms are the way to go for new traders. At least traders that are like, right, don't have much capital. My funded futures, or my, see, I was getting confused. My funded futures, yeah, that's what it is. But I've been with them all, Top Step, Apex. I mean, I started with my Forex funds. Been around quite a bit, so I've seen them all. Look at that. We can't get, oh, okay. There we go. So nice. So now we're partialed. We're spending too much time here. So I'm break even. We've secured 3 partials. There's no need to give anything back. We've made plenty. And now we just let it run, right? So now that we're out, we could be free and we could just let this run. So we're gonna leave the final contract for basically external range. And then we'll just take one off at first presented. So that'll be the remaining kind of price for us. 5 minute has closed. Look how the 5 minute is closing, right? This is what I'm saying. I don't like to see that, especially because that's previous day high. So if we can confirm and get above that, we should be good, but dub trade. Yeah, let's go max dub trade, baby. Ain't over yet. Win-win scenario now. Nice, beautiful. Okay, so probably should have partialed there, but because we partialed here, that's all right. Right, running down equity. We're gonna see if we get a quick snap. We closed above once. What did we say? 2 candles need to really do that to confirm the bullish momentum, in my opinion. If we leave that fair value gap right there, that's what we're talking about when we say, I'll probably actually try to add again right there, especially if this partial gets hit. So yeah, if we partial out here, we should probably partial out here. Let's do that. We don't need to reach for an extra handle. That's goofy. This high right here may be what price wants to reject from. So we're fine parceling at that liquidity right there. We may have missed it. Give us one more tap. 3, 2, 1, tapped, beautiful. Volume imbalance gets left open, even more beautiful. Second entry under the 5 to target the high. We go in with half the risk. That's on the wrong side of the market. Okay, so now let's clear some of this up. We've been partialed out. We have this high. Hopefully we can get the retracement. If not, that's okay. We're going to continue to look for the bullishness. Closure above first presented to us. That, I mean, we may actually move this last contract and do the old, right, use the stop loss as partials. Because I do want full bullishness, like I want up here. So maybe we just do that. Since we've already secured a good amount, I'm fine doing that. Yeah, we look pretty bullish, so I like this. We should keep running. Closure above midpoint, beautiful. Let's keep it up. As we said, we should go. We should get the high, right? We should get the high. One, cool. Okay. You were looking bullish as well on NQ. Nice, nice. I'm glad you enjoy it, 17 suit. Best way to learn, right? Just see it in action. That's all I'm trying to do, is really just point out the concepts. I have my own way of interacting with the market, but once you learn the concepts, you can really enter however you want. That's the beauty of it. As we said, we have another entry here, so we're expecting the retracement. We're going in with 0.25% of risk. We've already made about 1, so stop out is still in profit, which is why I'm fine, right? That's why I like stacking positions like that. We're gonna use the 5 minute. It's about to become an inversion. And notice as I'm gonna hide everything so it's easier to see real quick. I'm fine using this inversion because if we look from this low to this high, there's really no inefficiencies, right? Once we create this low, it's a wick. The 5 minute trades higher wicks. This candle comes into this candle's open. This candle comes into this candle's close. Right, so all of this price range in here is balanced. If we invert the 5 minute, that's all I'd want to see be used. But we may just run straight into the buy side. That was partial, that was sell side, that was sell side, that was entry. clear some of this up. 5-minute inversion, 1 minute as we leave the 5-minute inversion as well. So right, adding confluence, adding extra PD arrays on top of one another. Cool. Let's get that high. We may actually just close at the high. I wish I had another contract on, but if we can get entered first, we'll hold. If we run straight into the high, we'll just close. We'll do that. That's kind of how I'll treat it. So if we can hold the first presented, give the pullback into the 5-minute where we can get long, we'll then try to actually hold this for a little bit higher prices. But if price stabs right up into this 15 minutes consequent encroachment, we'll just close it and be content with that trade there. Holding pretty aggressively there, to be expected. Matter of fact, this stop, we need to adjust. Let me adjust the stop loss on that. I need to just go like this. Oh wait, shoot, this. So I could see it, okay. So stop loss, yeah, I don't want that low. This low should be protected, right? Which is why we're allowing this new entry, because stop loss and profit plus partials. If we take this stop out, we're still in profit. We may use this, so I am watching this. I don't have it marked, but I'm watching the most recent premium, or excuse me, discount that was formed, because that's maybe all price wants to actually hold from. And it does, okay, that's okay. Still held though. So we could actually, I'm gonna keep this entry here. Yeah, 5 minutes close. So I'm gonna keep this entry here. As we said, if we get tagged out, I still probably will leave this entry, to be honest. I think we can hold from there. But let's get buy side, right? Those highs are just too clean. Equal highs. Equal highs, equal highs. Because the way I see it, if we can displace above this, yeah, still multiple opportunities for entry. So let's kind of clear up. What do I want? I really just want the buy side. The 15-minute out my face. Look at what we used, right? 4-hour inversion with the 1. So that's why I'm saying I'm watching this fair value gap, because it's created as we leave the 4-hour. Just wanted to show y'all that real quick. Looks like we're going to want to give us that high. New low put in place. What we often see though is after hitting our targeted buy side, price will retrace into untapped inefficiencies, and if we're still bullish, it will then continue to run. So yeah, matter of fact, if we can clear this buy side, we're going to leave this entry, because then maybe we'll get the pullback into the range, hold from here, give us another leg higher that we can then capitalize on, maybe into the high of the 15-minute, or if anything, right, the highs up here, the actual buy side. Oh, that's too far, whatever. And same trade here on the funded. All right, we'll show real quick just where we are. Same idea. I took a little bit more partials just because, right, it's funded. We're going to guarantee our money. But same idea, same entry, same exits. For me, this exit, I'll just exit at the high. So holding the high of this first presented fair value gap, we expect that, right? It's going to be a pretty key area in price. It's already respected us. It's also an old buy side pool. So as we say, price will consolidate around old areas of liquidity. Pair that with the first presented. We are anticipating that this is all just hesitation though, to build in shorts, right? To get people to try to short here, retail shorts or whatnot. So then if we can get a slight retracement, even baiting more shorts, right? It's going to be breaking away, and then we blast right through all these highs. That's kind of our game plan. Yeah, I wish it would let me hide indicators and drawings both, but not the positions. Come on, TradingView. There's got to be a better option. So far, respecting first presented. Just always like to see that, right? When we start consolidating, I always just like to look deeper and see how these levels are still being respected to just build that confidence in the algorithmic delivery. Right, we hit the high, we get outside of it. Next candle snaps inside. Once we snap inside, low and high continues to protect us. So there's the high again, right? Just referencing that buy side. So I wouldn't mind slight term consolidation, retracement into established discount, clearing short-term liquidity, and then running higher. I like that a lot. Let's do that. If I was making the market, that's exactly what I would do. Consolidate, run out the stops. As we said, bait people that are trying to whatever retail nonsense, right? Supply, demand, resistance in here. I use first presented fair value gaps. I have a watermark for, right? That just kind of shows my name and content with enough. And then the main one is the ICT all-in-one, which is a paid indicator. Through a guy named Ethermat on Twitter. You'd have to find him, but he used to be in my community, so he let me use this one for free, which is cool. Because this one right here is money. That's pretty much what I use. That and the first presented. That's all I got. It helps with the key areas. So like previous day highs, new week opening gaps, new day opening gaps, opening range gaps. Those are all key price points that you always want to know and have on your chart, or at least reference somewhere. So I am liking how we're now using that midpoint right after hitting the low of it. We then accelerate above midpoint. Just gonna watch how we do that, if we can respect that. What time is it? 10. So we might wait till 10:50 actually. Consolidation till 10:50. Retracement to start the macro. Previous day high holds us. Acceleration into buy side. Yeah, that sounds good. What does the all-in-one do? So the all-in-one does everything, right? It does it all. So you can have, like I said, previous day high, daily dividers, midnight open, new day opening gap, new week opening gaps, opening range gaps, 8:30 opens. I like Sunday price. I like having day of weeks. I also have the kill zone background, so I know which time to be trading at. If you want more, right, like you can do market structure. You can do breaks in structure. Right, that's getting a little crazy because for me, I like keeping it simple. We don't need all that, and I could just see the breaks in structure and things like that. You can change the colors, so it just does all that. All bet. All right, here's what we're going. So we want to hold first presented, create the highs, retracement into previous day. Give us the entry. At that point, our entry will probably get like this entry will pop up probably like right here, I'm guessing. It's going to take the difference in them. Yeah, okay. So now stop loss below the 5. If we fall right through that, we'll stop out and we'll be done for the morning. If we can hold that, that'll be good for us, right? And we'll look for this 5 minute to pretty much just act as an inversion now and accelerate higher. But if not, we get stopped here. I like how we held previous day's high. So I want to see this candle now. Same idea, hold previous day's high, accelerate. If anything, we need to, I'm watching here. Okay, so this fair value gap, because we use it as support in the short term. We use it as short-term support. We then run out a high. So now it's going to become an inversion. So if we can get back above it, reclaim bullishly, we should be good for this entry. We should be right allowed to run a little bit. And now that we've added more contracts, we can actually see partial at the high. We'll wait and see. Could still get stopped, so don't want to be too excited too early, right? Very easily could fall right through this 5 minute, revert into equilibrium of our current range here, which would be down here. Notice that low is perfectly aligned with it. So if we want to come back into equilibrium, we have sell side to target as well. I want us to maintain at least one more bullish run. So right, once again, these highs are too clean in my opinion. We, however, have left the bearish fair value gap aligned with the bullish. So now a potential BPR. This may hold us if we go bearish. But I like the idea of trying to hold that. If we can get above these areas, we should maintain the bullishness. And then as we said, now that we have a few more contracts to play with, we can partial out. I'd take 2 at 5 from this new entry, which would be midpoint. Right at the midpoint. I would do one more at the high, just because. Running down the equity. And then that would leave 2 for this buy side. Yeah, okay. It all depends on right here though. Right, so these are the key areas now. Not even this, more so this fair value gap right here. This will make or break this trade. Hey, sounds good, Max. Take care, my guy. I'll see you tomorrow, I'm sure. Maybe not. Hopefully. Oh, okay. That's not good. Stop out coming. Yep, that's fine. So as we said, right, this fair value gap is going to make or break us. We're tracement into the range. That's cool. We might absolute blast off now. Let's see though, however. That'd be funny. Stop us out quick, blast off. Because we actually weren't below that low, were we? That's right though. Bad stop placement. This should have been below the low here. User error. Yep, that's L. Should have been here, right? We're still in the original. Stop loss is below the low. We'll just use this for now. Same idea. If we get stopped out, we'll be out of the trade. Now that we've created this low, we can actually move that though, because if we clear this low now, we're going to clear this low as well. So same idea. Target the buy side up here. You ever trade first presented? Oh yeah, always. When it presents itself. This week's been unique because we've had high impact news at 10 o'clock every day. So when that's the case, I'm never going to try to trade in front of that. Just personal preference, right? Because we'll always find that 10 o'clock should give us some pretty clean setups to take advantage of. So now we're using that previous day high as resistance, which makes me think, yeah, we may want to take this low, take us out. But that's okay. Well, let us see, let us see. Stop loss. That's a 5-minute low. See if we can hold that. Oh shoot, Nod Leaf, I missed your thing. How long do I reference the first presented? If we're trading near it, I'm going to use it. And that's why I like this indicator, right? Because it really lists all of them. So yeah, if we're trading near it, I'm going to use it. Okay, stop there. Oh, cool. So yeah, that was a good trade there. And we'll be content with that for the morning. We'll follow it maybe to like 11 or something, but I don't think we'll try to engage again. We'll do a quick little recap. So as we said, 10 o'clock news, once again, we're not trying to do anything before 10 o'clock. There's no need, right? If you're doing before that, you're just gambling in my opinion. 10 o'clock news is here. We said that we wanted to see midpoint of our opening range in this short-term low be cleared, and then we were going to wait for some type of reversal indication. So at 10 o'clock, we run that out immediately, but there's no type of indication or any really discount in here to go long. So we're still waiting, right? Price continues to fall. It then breaks through this low back below the midpoint of the opening range gap, leaving a bearish fair value gap. So for us, that's textbook, right? Because we always say if we're going to break through lows, original sell side liquidity as well, if we're going to break through that with displacement and leave a fair value gap behind, those should hold us bearish. So now, since we're bullish, all we need to do is wait for that to get inverted. We see price holds midnight, it holds the low of the opening range gap, it then displaces away, and then it closes above that original fair value gap with a 1 minute fair value gap of its own. Notice how that 1 minute fair value gap and the original inversion, the consequent encroachment, are the exact same. That's not random. So that for us was a clear-cut entry. As we said, we get long there. Stop loss goes below this new day opening gap because in reality, this wick right here should not be breached. Right, so this low is the protected low, which is why the stop is just below that. And then for us, our target was going to be this high, but as you saw, right, we were partialing along the way. So as we hit previous day high, we get below it, we partial as we trade into it again. We're consolidating, we partial as we trade into it again. As price runs up through these highs, we're partialing again. As we trade into the midpoint of this first presented, we're partialing. And then finally, as we hit the high of it, that's our final partial before we're stopped on the remaining balance in profit here. So overall, clean entry, right? Textbook entry for us, no hesitation to enter on that. That's exactly what we like to see. Creating discounts aligned with higher time frame reference points after clearing liquidity and forming SMT at the lows with NQ. So everything in there for us was an A+ setup, which is why we took it. Which was, oh, ES here. Dollar as well. Yeah, right. We don't really look at dollar much anymore, but as dollar goes lower, indices will ride or rise, ride. So that was just an added confluence. And now we are back inside. Did we get back here? Let's see. No. So maybe come back into the inversion, but at this point, as we said, we're probably going to return into equilibrium of that run, which is right there. We hit that perfectly. And now we'll see what we get. How do you determine the protected swing? So for me, I'm really looking at, it's a good question, because I almost internalize it now. So what am I looking at that would cause me to believe that? It's based off the liquidity that we have taken more often than not. Right, so when we create this low, we wick that low. When we trade back above it, I would say that this low should be protected. We then, however, actually run out the original wick. Wicks are gaps, right, as ICT teaches. So when we run out this low, right, create this new swing point, and then accelerate back above this liquidity, that's the purge and revert concept. This liquidity point should not be returned into because we've already cleared liquidity once and now twice here. So when I see that, I'm saying, okay, this liquidity here should not be retested, which means that, right, the fair value gap that's above it should hold us, especially because it's paired with this liquidity. And then from there, it's really just so much following order flow. Right, so like I wanted this low to be our protected low, because if you notice, as we're moving away from price, we displace above the opening range gap. This is a swing low that reprices into, right, all of this mess and then closes back above. So now in my mind, as I said, that should be protected. It does, and we get the acceleration. And it's only after delivering into the first presented do we get that retracement back down into it. And now after hitting equilibrium, now we're probably going to get that bounce. Which right, so now I would say that if we're going to be bullish, this low should be protected because we've cleared out a short-term low. We've then displaced above a higher time frame reference point in the form of this opening range gap, and we've left a fair value gap there. Right, same idea as well. Notice how we create this wick. We then run through that wick and purge above it. So I don't want to see really that liquidity point be breached again. That's almost the same exact idea as here. We create the wick, trade below it, get above it. We create the wick, we trade below it, we displace back above it. So like honestly, if I was going to try to go long, this would be a pretty clean area. So I still think these highs, man, there's just too, we did clear them here originally, right? So if we don't want to clear them again, that makes sense that we're getting stuck at the first presented, but I think all of this is just baiting people to try to pile into shorts, and we're going to rip those people off. Shall see. It's also the 5 minute as well. We might try that, to be honest, because we've closed in front. Do we try that? With 2. Buy right there. Nah. We'll just follow it. Don't got to be involved in every swing, right? But for me, we can follow them. So like I would enter long there, and I would target that buy side like that. Let's see if that low gets cleared. If that low gets cleared, I think we just consolidate heading into lunch after, right, delivering into first presented. As we spoke about, if we don't want to clear external range liquidity, we get held at really the last premiums before that. So buy side here is external range. Last true premium would be the first presented, right? Low the 5 minute. Let's see what happens. Theoretical trade entry. Hey, no problem, brother. Take care. I'll see you next time. Maybe. We're here almost every day, so. We're getting a little confused. Let's clear some of this up. As we said, I think we just continue to play around this level right here. So we'll probably come back down to reference that again. If we don't want to, that should be protected. Wait, that's actually a different low. Hold up, never mind. So that's actually, usually that's not the case, but there's an actual discrepancy between the charts. So yeah, I take that back. We would not, right, on the micro trades into this, but the actual contract hasn't. So this would not be valid, as I would have thought before, because we haven't cleared that. So as a matter of fact, I could almost like, we might try this. We could do like 250 on that, a little 0.25%. Turtle soup entry inside the volume imbalance with the expectation that we run out the equal lows and we want to hold the original fair value gap that we entered on to then target up here. So on a micro chart, right, that's still valid here. That's weird that there's that discrepancy. Usually that's not the case. On the actual chart, I'd rather have this set up, yeah. I trust this one more, like this. Do you live stream every morning? I'd say most mornings. 4 out of 5, sometimes, right? 5 out of 5. Like this week we did every day. Really depends on the high impact news schedule. You guys, let's try turtle soup. I'm fine for that. Because we're holding that, boom, boom. Consolidation, wipe out the lows, return into equilibrium. What's equilibrium of our actual dealing range? That's there. Okay, so double equilibrium. Truest of truest dealing ranges is here, and those equilibriums are also overlapped. What time is it? 10:55. Midpoint. Let's go one here. We'll try one full pull. This is gonna be turtle soup entry. So I'm trying to go in with the assumption that all of this in here is consolidation, right? So we're currently, our true dealing range is this low up to this high, right? Because this is the low here that clears liquidity, sell side. This high clears buy side. So that's the actual range we're within, because this low never clears lows and this low never clears highs. So as I look at that, right, that's where I'm looking at the midpoint of that range. And we're hitting that perfectly. So this entry is kind of off the assumption that we want to remain bullish and we don't want to venture back down into the lower quadrant of this current dealing range. We are consolidating, however, so we're going to try to target some maybe short-term equal lows that have just been created here before looking for the true reversal. So we're going to try to total soup those sell side targets with the understanding that this original liquidity and the original entry should maybe hold us. And that's what we're going to use for our stop. And then we'll just look for the first presented, because we have relative equal highs right here. If we end up running these highs first before we total soup these lows, then we'll just basically call it, right? We won't try to engage again. Small fair value gap right here. Watch that. Ugh. Yeah. Well, yes, that did pan out as we would expect. Interesting. We do hold that little baby fair value gap right there. Yeah, opening range gap, right? It was paired with the opening range gap as well. Honestly, if we can bounce off that, let's see. I still don't mind this. What time is it? 11. So wait, we'll wait till 11:10. We can get miniaturize, seek, and destroy within this price delivery itself. So we'll see if we do that. If not, like if we just run straight into highs, as we said, we'll just miss out on that. So there's that buy side. Back inside first presented. Closure above first presented. Equal lows though. Closure above may give us... That'll be the breaker right there. SMT at the lows. So this may actually be the move here. We created SMT at these lows. Create the OB as we leave the opening range gap. Small fair value gap aligned with that. Maybe we can hold though. If we can hold first presented, get the run on equal lows, then get the retracement. We do got to watch here, because that's going to be a mitigation block on the micro chart. But that's like where we would be stacking the entry. So this one would have held. This would be where price should hold from actually. Let's see. What time is it? 10. Yeah, especially if it's trying to reach this before 11:10. I'm watching this right here. Right, this bearish fair value gap has been holding us down. So when this candlestick returns into the 1 minute here, it closes on its high. So if this candlestick closes above, to me that should be used as support to then almost send price right into that buy side here. Closure above, waiting for it, waiting for it. So we, oh. And above, okay, yeah. So notice at the same time we close above inversion and we've closed above midpoint of the first presented. So we should, yeah, we should use this. We may use the midpoint of that first presented, not even come back down into this one and just run. But if we do want to, right, revisit, I'd look at this as a potential area. Hold the inversion. Just not worth it. If we could have squeezed 5 handles out of that. May have tried it, but a little too close to the objective here. So we'll just follow it. As we said, yeah, we probably should hold this area. The 15-minute is kind of hideous. That's crazy. Respect it once, respect it twice. Closure above first presented. Buy side should be easy. Midpoint of the inversion. See if we want to get lower, if we want to respect that. Yeah, if we can come back down here, I like that. I mean, look at this. It's just... let's hide it all. Right, we're going to probably blast right through these highs. Oh, there it goes right now. Let's see. So inversion holds. Notice that the wick goes into the midpoint, as we said, but the body is holding the actual first presented fair value gap below. So just kind of blending right the PD arrays. Wicks are doing the damage into the lower time frame PD array, while the body is respecting, right, the more key PD array in the form of that first presented, and then perfect delivery right into the high. So as we said, just cool to see like the algorithmic signatures in price. Right, like that's not a random area for price to just stop and reject. Closure above, as we said, should signal pretty easy run to the buy side. So yeah, that inversion holds us and we have a bullish volume imbalance. So more than likely we tap this candlestick's close, push into buy side. Or if anything, right, hit the high of this first presented, run into buy side. There's the high of it. We'll see if we accelerate higher. At this point, we're not going to get that, so if this stays open, next candle will probably run out that buy side. If this one doesn't do it immediately. Yeah, I do. NQ should hit the same. So that does stay open, so honestly, it's like, could use that. You squeeze 5 handles out of that. What would that get you? 15-minute high. NQ in the same spot above its first presented. That's entry right there. Kind of want to take that. Nah, no need to give it back. No need to overtrade. We're so close. We'll just follow it, as we said. If we come back down, we're just getting choppy. Should hold so perfectly into the low. If we're going to run, it should be now. This candlestick should not be broken because it's about to be 11:10. So right, close the macro by running out the buy side. Call it a morning. That would be pretty. So right, this very next candlestick runs right into the buy side here. Let's see. Isn't triple highs bearish? No. Because that's just buy side to be targeted. Unless you're talking about 3 drives, right? That's different. But if you're just talking about relative equal highs, no, that'd be more bullish. You're saying it's like this, like 3 highs like this or something, right? Because then we target those. But if you're saying something like this would be bearish. 3 drives higher. And then you may want to revisit that first low. Then potentially, that's like a sell model. So no run. So yeah, at this point, right, it's just kind of choppy, and it'll be high resistance if we're gonna even get up here. So we're content just walking away now. Okay. Yeah, we over it. So yeah, good morning. Once again, it's really been the same framework every time, right? If you notice that, that's why the market's nice. Let's go back. Let's kind of hide all this. Oh, because I just want to show you, right, like the entry mechanics we're using, while the PD arrays may slightly differ, the actual structure is pretty much identical each time. So let's go back to the first one we took on Monday. What? Oh, it's like, where's Monday? So all we've been looking for all week is for price to create a run lower that clears some type of liquidity, for it to then purge back above that liquidity. All right, so let's bring it up now. So on Monday, the trade entry, we run lower, we clear liquidity, we come back above that liquidity, we leave a discount. That was our entry right here on this swing low. Easy. Right, runs higher. Tuesday, well, what do we expect? We're still expecting bullishness. So we're waiting for the same thing to take place. Price runs out, short-term low. It reverts above that low. Right, in this case, the discount here is the form of the first presented and the volume balance. Right, that entry holds and we run higher. Now today, still the same idea. We're expecting bullishness. We're waiting for a run lower. We do fall short of the low of day, but we still pick up all this sell side, right? We pick up this sell side, this sell side, this sell side. So we still pick up a lot of sell side. We then revert, creating a discount, inverting here. We're getting back above the original liquidity, and then we run. So this one, we don't end up clearing buy side yet. We probably will, but we don't even need to get there to be right profitable. But you should see the actual framework for the trades are pretty similar each day. It's just a matter of finding, right, which areas are key and which PD array for the time being will we use. Like that. So we're done for today. As far as tomorrow, if we don't clear this high, that'll be the objective. If we do clear that high, then we probably will clear that. Let's see. If we don't clear it, more than likely we might actually revisit this little fair value gap right here. Let me kind of clear all this up. So potential retracement into this, if we're going to hold this high for the time being, we have the potential of retracing into this 4 hour and then running. If we do clear the high and close above it, that's our buy side. So if we break through the high, we should run. I mean, look at all these highs, right? Pick and choose. You have your choice of highs over here. That's why we're still looking for bullishness. Any of these could be targeted. Right, none of these were higher highs all the way here. And as we said, this is actually a daily fair value gap. Yeah, so that, I like that a lot. A lot of untapped buy side resting below a daily inefficiency. So I'm expecting all of these levels to be met. And those will be our objectives heading forward. For us to get any type of bearishness, for me to really be like macro bearish, if we close below this 4 hour, I would target maybe this 4 hour or a low here. But for the time being, I think we just keep maintaining this bullish price delivery. Those lows may be the only issue we have, really. But as I said, we did create S&T with NQ, so that's giving us a little bit of protection with these lows. Do we get that high yet? Nope. Keep stalling just because I want to see us clear that buy side. We'll go 5 minutes max and then we're done. Hard cap, 5 more minutes. How come I didn't put my stop below the wick low on your first entry? How come I didn't put my stop below the wick low? Oh, so you're saying when I re-entered here, that's just because I was using the 5 minute itself, right? So we had created, as we said, a 5 minute inversion here. That was pretty much aligned with the high of our opening range gap. The 5 minute closes above here. And then if we look, there's really no inefficiencies lower on a 5 minute sense. So for me, I just wanted the 5 minute to hold. So when we get long, our stop was below it. It should have been below this swing low. Either way, we'd have been stopped, just painted outside the lines barely. But yeah, for me, I just wanted the actual 5 minute fair value gap to hold us, especially because it was paired with previous day high, right? So we were using that as our entry, just like that. Just a little deeper retracement than we would have liked. And that's kind of why, right? Like, that's a good indication of why we actually haven't run out this high either. Because if we truly were bullish for this high here, we had no need to return below that 5 minute, really below yesterday's high. And that's why we see, right, even just us getting below yesterday's high is indication of why we cannot now clear this buy side, because that was really never the objective on this price run. Instead, it was only to get us into the first presented. That's why we get the retracement, and now we're consolidating. So we may get the buy side eventually, but that wasn't the real objective for this move low to high, and that's why we end up getting stopped. It's like right now, maybe we run into it since we've traded lower, finally clearing a short-term low. We got 1 more minute before we leave, so we'll see if we do it. If not, oh well. And it also wasn't here because right when I added this stacked position, the original entry got moved up a little bit, so I wanted to maintain our break-even status. No problem, dog. The unk, I love it. Listen, I'm not even 30. I put some respect. Young unk. You gotta be 30 at least. That's my cutoff. You can go with big bro. 2 trades. Yep, just 2. So the original one here, plenty of partials. So we were just gonna try to stack a position and target the buy side. Instead, once we get that stacked entry, stop gets placed to break even, and then we get stopped at break even on that wick lower. So overall profitable. Just try to add another one, take advantage of another little run higher. All right, fellas. Well, we tried to bait, we tried to take some time to let price do its thing, but yeah, it just doesn't want to get up there, right? That wasn't the objective. And as we said, getting and closing back below previous day's high is already an indication that we're going to struggle to run for buy side. But we'll leave y'all with that. We'll be back tomorrow at, do we have news again at 10? Let's see. The classic 10 o'clock all day this week. We sure don't. Okay, cool. So tomorrow we just have news at 8:30 Eastern. So it'll be a normal stream tomorrow. We'll get here about 9:25, just before the opening bell. And we'll see if we can't keep it rolling. We're looking for another good trade opportunity. If we can leave these highs, if we somehow, right, leave all of this and retrace into the 4 hour heading into tomorrow, that'll be some juicy opportunity for longs, honestly, in my opinion. But we'll have to wait and see what we do. I appreciate y'all hanging out this morning. If you guys are going to be here tomorrow, we'll talk then. If not, have a great weekend, everybody, and we'll talk whenever. Take care, everyone.